What is up, guys? Happy Monday. It is the 27th of March. I just want to do a quick update on the weekly candle since that did just close. So I'm going to keep this one quick and straight to the point. Let's dive into it. If you haven't subscribed to the channel, subscribe, smash the like button. Let's get started. So what we have here is the weekly chart of Bitcoin. You can see Bitcoin is at 27,700. So what is interesting to note is you can see how the candle closed, right? Perfectly in the middle, little doji here after this big move up. Now there's a couple things to look at that we have to keep in mind on the higher time frame. First of all, let's start out by saying this is still above the 50-week moving average. So in my opinion, as long as the price is above the 50-week moving average, the higher time frame trend is bullish, meaning that as long as we are currently you can see it's currently 22.9. So as long as the price stays above $22,900 with the weekly close, the trend is still bullish. So that means there is room for pullbacks on the shorter time frame, meaning it can drop several $1,000s and still be in a bullish trend. Now, some other things that I want to show here that may or may not be important. Ultimately, time is going to tell. But if you look at this whole move over the last, say, 2 years or so, there aren't many examples of the price making a candle like this. And the only similar one, unfortunately, is the one here with the red arrow, where after two major big moves up, it created something similar and then it reversed back down. Now, things are a little bit different. Okay, so even though the candle looks the same and that's a similarity, a big move, little candle, and then here it moved down, we are structurally in a different market. Here, the price was bearish. We were below the 50-week moving average. We were making lower highs and lower lows constantly. So the trend is reversed. We got back above the 50. And compared to this, we have made a higher high and a higher low, as you can see. So the trend has shifted, and as long as, like I said, we're above this 50-week moving average, the trend is bullish. Now what we do have here is some resistance. As you can see, this is horizontally just a strong level where previously the price bounced here on the way up. On the way down, it held as support in the May 2021 drop. And on the way down, there was activity here. So coming up here, obviously we had a strong run for most of the year, and we are running up into that as resistance. Now, if we zoom in to lower time frames, one thing that we also have, which I do not like, is the bearish divergences here, right? You can see this whole move up. We have been making higher highs here on the price, but the RSI has not been confirming it. And this is on a 3-day chart, which is not something that you want to take super lightly, because bearish divergences on higher time frames usually can warn of major trend reversals too, right? Even here, we had this on a larger scale, and this was present even on the weekly chart. You can see we made the higher high here, but the lower high, and that ultimately led to the top of the bull market and resulted in a lot lower. So we have to be careful here potentially what is about to happen, because you can see here, even here on this initial top, we had these 3 thrusts over here. As you can see, we had 1, 2, 3, and that was making higher highs, but the RSI was not confirming it. In a similar way here now, we have the price making higher highs, but the RSI is not confirming it. We're up against resistance. This divergence is also present on the daily chart. So you can see it's a 3-day divergence. It's a daily divergence running into that level over there. And obviously we can see we have activity here too, quite a bit. If you zoom in on the daily, it didn't really look like that on the weekly, but on the daily it definitely does look like that. So what this means, in my opinion, like I said, as long as we're above 23,000 with the weekly close, the higher time frame trend is still bullish. But on the shorter time frame, in the 3-day, the hourly, maybe even the 12-hourly, we have these negative divergences, and a lot of the time this results in a pullback, in a correction. So I would not be surprised to see us pull back in the next couple of weeks, potentially. Hopefully the first target will be here at this level, this double top kind of level, 25,000, 25.3, which was that. If we can drop to there and bounce and continue higher, that would be great. So we'll have to see, in the event of a drop at that level, do we see signs of support? If it continues going lower than that, well, like I said, 23,000 is now at this point, in my opinion, the line in the sand where we should not get a weekly close back below 23,000 if this is going to continue to be bullish. So we have to keep an eye on that for the short term. I do think potentially in the next few weeks we can see that pullback, and maybe we go down first before we see 30,000. Maybe we see 25,000 or 24,000 before we see 30,000. We do have the monthly close coming up in just a few days. So on the 1st of April, I will be making a video update on the monthly closes, and we can see how that looks by then. Obviously, a lot can happen in 4 days in the crypto world, you know that. So let's see what happens with the monthly close. For now, that's basically just how I'm seeing the charts right now. On the shorter time frame, daily, 3 daily, we're looking at potentially a pullback in the next couple of weeks, maybe sooner, potentially to 25 or 24,000. As long as 23,000 holds, the trend is still bullish in my opinion, and we are still targeting hopefully at least 32,000, take out this high, and then maybe this high over here, the Fibonacci golden pocket in confluence with this high at around 48,000. So let's see how the weekly close develops. Subscribe to the channel as I will be doing an update on the 1st, and I will see you in that video.